Today I'm going to be going over key principles that enable me to become a World Cup champion trader. And I'm going to talk a little bit about range expansion. And I'm also going to talk a little bit about using statistics to define your potential outcome when you're doing trading. The kind of trading I'm going to be covering today, unlike Larry's did a really nice presentation on selling premium, my focus is going to be on intraday charts, and so that's where we're going to be looking. And if we have time today, we'll go over some charts and take a good look at them. I'm owner of IndicatorSmart.com and OilTradingRoom, and OilTradingRoom is a training ground for traders in any market that they choose to trade, but we use crude oil in there because it's fast moving. And you can learn just a tremendous amount in crude oil in a short period of time. Very fast learning curve for that market. So that's why we use that market for our training. As always, past performance is not necessarily indicative of future results. There's a risk of loss trading futures. I have been trading trainers for many years now, and I've never seen one be truly successful trading the money. And so don't use capital that you need to take care of your family for trading. It just usually doesn't work out. Successfully trading is something that occurs when you're following a process, number one, and number two, that process needs to be in alignment with your belief system. If it's not in alignment with your belief system, you'll get into trouble too. And a lot of traders get into trouble right in that area. And we'll probably touch on that a little bit. So today's topics, I'm going to cover some key trading principles about market cycling, particularly in trends and even counter trends. We could probably identify a couple of things there. And also how to identify trends before they start, which is also a cycling concept. How to identify where markets move fast or slow so that you can get in during times when the market's more likely to move and stay out at times when it's going to be quiet. How to map the market to know when moves are likely to occur. I'll share with you how to do that and show you how I structure that. And techniques that I'm going to show you work in all markets and actually all kinds of time frames. And so though we're going to look at these mostly for intraday charts, you can also expand these concepts into higher time frames as well. So what is my mission? I started trading first in 1979. My mom got me started trading. She was a blue chip stock investor, little 5'2" lady, worked at the phone company. And when she passed, we didn't know this because she always told us she didn't have any money. When she passed, we found $660,000 in stocks that she had accumulated in with stock certificates and filing cabinets in the basement. And so I took my first trade under her advisement in 1979. My grandfather passed away and left me $500. And so I got started there. By 1991, I was developing computerized trading models. And I had a really hard learning curve with that because nobody really helped me to be in that area. And I took some really hard hits. And so my education was long and hard. And I eventually developed a model that was for the S&P 500 by 1996. And I got a call one day. I had a service for the S&P E-minis. Actually, the E-mini wasn't even there yet. It was just starting up. And then I got a call from a futures clearing firm, said, hey, we want to raise some money for you. And the next thing I knew, we were trading 3,000 lots in the ES. And so that in itself was an amazing education. So my company today is called Axiom Research and Trading, and like I said, It owns OilTradingRoom and IndicatorSmart.com, and I train a lot of traders as well. And so, but back to my mission, nobody helped me to be successful as a trader. It was very difficult for me to become successful and took tons of work, literally working every day for 7 years to come up with my first computerized trading model that worked. Literally 7 years every day. And so as I've experienced success, I have made the choice to reach out and help other traders. And amazingly, I have learned more by bringing other traders on board and training them than in the last several years. Then it's just astounding. It's just astounding what has happened. And so as I alluded to a minute ago, I found that a lot of traders had trouble with the psychology in their trading. And so I also am a neurolinguistic programmer and timeline therapist, and also a board certified hypnotherapist. I help people to improve their trading. And so I bring kind of a unique thing to the table in that respect, because I am a trader, and I help traders to overcome psychological issues that they have with the trading, issues with pulling the trigger and things like this. And so that's kind of fun. And actually, I learn even more doing that, and so it's pretty cool. So my mission these days is in helping traders to learn to trade and to also get everything in alignment so they can be successful. And that expands out into everything they do in their life. And that's very rewarding for me. In fact, I get a big buzz off of it. So my webinars are pretty fast-paced, so take notes. And if you have questions, we'll do them at the end, please. You can always reach me, support@indicatorsmart.com or support@oiltradingroom.com. The quality of the questions we ask ourselves determines the quality of our lives. So what's the deal with, you know, everybody's heard 95% of traders lose money. What is that all about? What I've found, consistent with what we've been discussing the last couple of minutes, 99% commitment is 100% sabotage. If you have a goal and you're just 1% off, you do end up way off course. Way off course. And so what happens to traders is beliefs that you have control your outcome. Your beliefs control your outcome, but you're not conscious of your beliefs. And so if you're trading and your beliefs aren't consistent with your trading, you run into trouble. Imagination controls and creates belief. Imagination being your unconscious mind. In the world of logic and imagination, imagination always wins. And my favorite analogy to this is, you know, you can put a 2x4 across your living room floor and walk across it, no problem. But if you go out behind the garage or go over to Home Depot or whatever and grab a couple of concrete blocks and put it just a foot off the ground, walking across that 2x4 becomes a whole other issue. This is because your imagination starts taking over. And whatever you have in your imagination is your belief system in that moment. If you take that 2x4 up and you put it across a couple of ladders where it's like 5 feet off the ground, then that becomes yet a whole other issue. And if you put money on the line for it, it becomes yet a whole other issue. And so your imagination controls your and creates your beliefs. And imagination always wins. That's your unconscious mind operating for you. So if you have alignment with your beliefs, then you can have 100% commitment. 100% commitment is 0% sabotage, but 99% commitment is 100% sabotage. And that's what I found is the difference between traders being successful and not being successful, is them being able to get that alignment with what's going on. The only place a dream is impossible is in your own mind. But you can't have something interfering with the dream. And so this is kind of cool, and so I just thought I'd share that with you. So most traders come into trading and they don't really have a lot of knowledge of market structure. They don't really have any specific education. I work with a lot of doctors and lawyers that come to trading, engineers come to trading, and they've been just very successful in their career in those fields. But then when they get over to trading, they find that it's a different thing to have to deal with. And there's a couple of reasons for that, and we'll cover those in a few minutes. But you have to have some market-specific education that enables you to base your decisions on things that are factual. So in order to do that, you have to have a solid methodology, and I use a lot of statistics, as I had alluded to a few minutes ago, in order to do that. And I'll share with you some ways of doing that today. Traders are some of the highest paid people in the world, billionaires in many cases, and on different time frames, Warren Buffett, George Soros, and many others. So we're willing to take risks in order to achieve the dream. Trading is hard work, but it's very, very rewarding. And as your mindset comes into alignment with that, and you can have a vision for your future, both immediate and further out, combined with a desire to succeed, you can do very, very well as a trader. And so we're going to get into some resources here today for how to build that dream. I had a trader that came to me a while ago. It's been about 6 months now. And I have any number of these, but this particular case was exceptional. He sent me, I got an email one day. Guy says, how do I know I can trust you? I found out he'd been ripped off. Well, not ripped off. I don't want to be negative. He had gotten trading education that did not lead to him being able to be successful. And so I see this all the time, and it doesn't mean that the things that he got into didn't work. It's just that it didn't work for him. And there were some of these alignment issues, of course, this kind of stuff. But I sent him over to a link that was an interview with Robbins Trading Company. I'll share that with you a little bit later. It's kind of a cool interview. And he went and looked at a couple of my webinars, and he came back a couple hours later and he said, I want you to be my teacher. So he's making that commitment, right? And so in the next 6 months, he ended up making about $500,000 trading in crude oil. And that, of course, is not a normal case. But he got his mindset in the right place, and he's been an inspiration to me and I've learned a lot from him in the process of helping him to do that. And actually, some of the techniques that we'll look at today come from some of his ideas that he's been successful with. So I'm going to share that with you as well. So we're about to go on a journey. And before we do, I want to teach you something called the learning state. The learning state is a state. In any given moment, you're in a certain state. You're feeling good, you're feeling bad. You know, if you're long and the market's going up, you feel good. If you're long and the market's going down, you feel bad. And it alternates all day long. Of course, you shouldn't be feeling good because the market's going up. Of course, you do. If you're long and if it goes against you, you shouldn't really be feeling bad if you're following your process, right? And I'm going to teach you a state that helps keep you on balance. It's very, very powerful. In fact, I teach this to kids. And if you teach this, if you've got children, and you teach this, what I'm about to show you to your kids, we have 20 years of data shows the grade point average will go up 1 to 1.5 grade points just by doing this when you go into the classroom. The way you do this is you're sitting at your computer there, look up above the center of your gaze, maybe up above your computer monitors, and find a spot on the wall or up above so that you're looking up just above the center of your gaze that you're looking straight out. So you're looking up, find a spot on the wall, and just let your eyes fixate on that spot for a second. Now I want you to notice that as you do this, your peripheral vision goes outward. And so if you bring up your right hand and you hold it out on the edge, you bring up your left hand and hold it out on the edge of your head 180 degrees out, you can still see it. So your vision's gone really wide. You can actually do this with your hearing too. You can make your hearing go out. Okay. Now a lot of times what happens when you're at a computer or you're trading or you're doing something, what happens is your vision gets very, very narrow. And as you get narrow and narrow, you have fewer and fewer choices. Your thinking becomes narrow. As you go into the learning state, what actually happens is your mind opens up. Another nice thing about this state is it's impossible to be judgmental when you're in this state. A lot of traders are judgmental about themselves. And so I share this with you to help you to learn to be in a state that is openly accepting of yourself and of others and of your trading, and to help you be in a positive state. It's impossible to be in a negative state when you're doing this. Now you bring your gaze back down. If you're teaching it to a kid, you bring the gaze back down to the teacher, and the mind's wide open. I teach you that today. I call it the learning state. I teach you that today, both so that you'll get more out of the presentation that I'm about to do, that you'll improve your state that you're in while you're trading, more positive state, better ability to see your future, and to impact your trading in a positive way, and to share with others that might be in your family or whatever that can also benefit from that. Little kids are in this state all the time because they're looking up at everything. And a little kid, a 4-year-old kid's learning upwards of 100 new words a day. And for us adults, learning 100 words would be next to impossible, pretty much impossible. You'd be reviewing 3x5 cards all day long trying to learn 100 words. You couldn't do it. But a kid, no problem. Why? Learning state. So I thought I'd share that with you. So we're about to go on a journey, and I want you to go to a time when you were on a journey in the past, or to a time where maybe you found something valuable. And you might go to a time and a place where you discovered something new, or an experiencing where you experienced a change in something profound. And from that day forward, everything was different. Every day can be like that. You know, you discover millions of things that you're not aware of in this moment that can be a game changer and can shift your whole reality into powerful manifestations for your future. This is important for trading. The journey to become what you really are. And you may find yourself going through various phases. Often, as a person comes into awareness of the world, they have a few failures that lead them to have a loss or 2 or 4. This is a necessary process. You have to have the losses. Some make the mistake of, instead of embracing the loss as an opportunity for learning, of interpreting it as a for and against world out there. Albert Einstein said one of the most important things you can ever decide is whether the universe is hostile or friendly. It's one of my favorite quotes from Einstein. People who choose hostile become disenchanted and negative, and in the process they give up their power. So what I'm talking to you about right now is your power, and you own it now. People can be very powerful, and ones that profit from failures and setbacks by learning are ones who seriously gain in the long run. To these people, the world looks like an opportunity. That is your opportunity. They strive to take 100% responsible for what they achieve. They look to the inside for making the best of themselves and not to the outside for a handout. In this way, you are empowered. What happens in your life is not your fault, but it is your responsibility. I mean that literally. But in order to truly learn, you may find yourself breaking out of the box that you presently encase your beliefs in. In this way, you abandon the filters that you'd normally use to interpret and understand what I'm saying. This is really counterintuitive. You must not filter what I'm saying, but yet you still have to understand. To do this, you go beyond what you know and trust the process. By trusting in this way, you open up the door to all possibility, literally. So what percentage of what you are not aware of right now are you in control of? You have a choice. You can control what is within you, and that changes the world outside. So be happy. Make the choice. Choose to get what you want. And you can choose that in any moment. In this way, you wake up and claim your power. Be driven by inspiration in each moment. This is the place where miracles happen. So, as we take this journey today in this webinar to see things that are powerful ways for you to trade, and as you hear and understand and get a solid feel for ways of trading that are a game changer for you, and as you find something valuable, as you discover something new and transforming, let your inspiration shine through. Let yourself get aligned. Let your inspiration shine through and take a solid hold of what you really want. Run with it and enjoy the possibilities. So, what if you always knew why you were making a decision when you traded? What if you knew how behind what makes the market tick and can use it to your benefit every day in a live, hands-on environment? For example, what if you knew the facts and figures and statistics about the most likely market movement at any given point on a chart? That'd be kind of cool, right? What if you knew enough about market structure and the language behind it that if you could easily ask what if kinds of questions about what the market was trying to do, and this led to creative discovery and trading solutions? When you get to that place, it's really awesome. And so I'm going to try and get to some places that can help you to answer some of those kinds of questions for yourself and empower you. Trading is like a business and is a risk management methodology. Trading always has to be handled as a risk management methodology where potential for reward can exceed risk. I like to use analogies from sports. Ted Williams, one of the most famous batters of all time, had a simple batting system I'm going to share with you in a second. It was based on statistics. It made him one of the greatest batters who ever lived. Had a .344 career batting average, which might not seem like much, but it's a big deal. Ted had this box that he created called the zone. We're going to talk about zones in a little while. If you hit any of these brown ones, you're a 400 level batter. The orange ones are 344. That's what he was. The yellow ones are a little bit lower. I know it's hard to see that. But if you strike at these outside of the strike zone box, your average goes down really quickly. You're down in 16% or something by the time you bat over in here. And he laid this out, and he had this system for batting. Very cool. And so we're going to use similar kinds of concepts in the ideas that we're going to do today that lay out statistics for expectation. And then I'm going to show you how to put those together into a powerful system. A powerful system that adapts. So, principle number one, as markets trend, the cycles become longer. Sometimes you can see it in advance. I'll show you that too. Basic cycle analysis as trend determination. We're going to analyze cycles and use it to determine trends. As the market consolidates, cycles become shorter. This is probably one of the most important things I ever learned trading. It's so simple, but it's so powerful. I'm going to show you how to do it. The principle on its own is powerful, but you can also combine it with different kinds of price bars to make it even better. We're going to look at a Smart Renko bar. It's a bar I developed for my trading room, but You can do it on other kinds of bars, but let me talk about bars just for a second. Bars are like a way of organizing data, price bars. A lot of people use like time-based bars. If you're trading out on longer time frames, that's fine. But when you get into the intraday time frames, time-based bars can not be the freshest thing. And so we use bars that are range-oriented, like a Renko bar, but we also use bars that are oriented around order flow. Bars that are oriented around order flow will actually allow you to see momentum and price movement together in the same bar, and so you don't have to keep track of a lot of indicators on your charts. You end up with really clean, simple charts. I'll show you some examples of this, but I just wanted to touch on that for a second before we go look at this chart. This is a Smart Renko chart. The construction of this is, this particular one is, these reversal bars are 10 ticks tall. You see this one's twice as tall as the one next to it. The reversal bar is 10 ticks tall, and then the continuation bars, we call them, are 5 ticks. And you get a reversal bar is 10 ticks, and a continuation is 5 ticks. And so what this chart is showing is that I'm getting an expanding cycle. I go from 6 to 14. I think the next slide covers that. A cycle of 6 is followed by a cycle of 14, so the cycle is expanding or trending. Those two go hand in hand. Now this is kind of intuitive, right? You got a cycle that's expanding, the market will go up or down in a trend. But if the market's chopping back and forth tightly, and the cycles are short, then it's consolidating. Now the cool thing about the tool I'm about to show you is it'll actually show you these things even before they occur. You can't really see it just by looking at the chart alone. The tool will analyzes cycle lengths in 2 different dimensions while adjusting to the cycle length. We call that a smart momentum. It's a tool here. And this is a specialized type of momentum tool. Okay. Now this is an adaptive indicator, adapts to cycle length expansions and contractions, enables us to see cycle expansions. Okay, the tool will use, okay, I already said that. So let me see. Okay, I've drawn on here the way the tool works. Okay, I'm going to do this one first. So I have a low here, and then I have a higher low up here. And then at the same time, this is going down. So if it's slanting line, I do the 6 to 14, but I just make a higher low right there from that low right there. And then this is lower at the same time. Some call this a hidden divergence. I call it a type 2 divergence. I worked with a programmer years ago, long before anybody had published any of this kind of stuff, and we called it a type 2 divergent pattern. This is contrary to the type 1 divergent pattern that is taught with a lot of people teach that, but those things get you into trouble. They'd have you like buying here and stuff like that. So you don't want to use that unless it's associated with some other kinds of things, and I teach that in some of my advanced course materials. But this pattern in itself is extremely powerful, extremely simple to use. It's easy to learn, and it is literally the key to the kingdom for trend trading. So let's go look at an example over here where it actually shows you that the market's trending before it even cycles. See here I've got A, B, C, D, E. If I count that A, B, C, D, E, I'm just basically using the colors here. Okay. Here I just go A, B, C, and I'm higher. This is very predictive of a continuation for the downside. Now I've drawn that as a slanted line, but the easiest way to do it is to just carry it over and say, am I higher? Am I higher? If I'm higher, I'm looking for a sell. And then we bring in other things for a triggering system so that we can enter into a trade like that and manage our risk. So here we go, A, B, C, D, E. Is it lower? Yeah, it was lower starting from that point right there. That's the easiest way to learn to see these kinds of diversions, is just look straight across. Is it lower? Yeah, it's lower. Is it higher? Yeah, it's higher. Oh, okay. I'm looking for a long right here. Just got to trigger into the trade. This is a statistical edge. So we already covered the one on the left for the short trade. This goes on all day in many a market. That's a really good principle for you to get under your belt. I'm going to talk for a minute, about different kinds of statistical organizations and trading systems that can help you a lot. So this pattern that I'm showing you here is predictive of range expansion. But we're going to talk about range expansion in a minute. If the range expansion, if the expected range expansion for the day has already occurred, then I'll have more risk in the trade. I think I'm going to cover go through some slides that are going to help you with that concept. But essentially, we have any number of ways of predicting the range expansion for the day. So like, for example, in crude oil, you usually go 100 ticks off of the lower high. In other words, the total range is 100 ticks. It's $1,000 in crude oil. And so if you're getting this signal right here, and you've only gone 60, you know you got 40 left. That's a much better trade than if you get this set up right here and you've already gone 100, right? If you knowing the facts that I just described. And so that's a range expansion concept. Now, I think we've got some slides for that. So like Ted Williams' batting system, this kind of stuff aligns you with the right stuff to swing at and get you into situations where the market's more likely to be moving. And we're going to cover open zone kinds of concepts that I told you in a minute. So amazing principle number 2, trading with the trend tends to stack things in your favor. Now that in itself could be a whole webinar, but I'm not going to go there right now. But I'm going to show you some basics on this concept. I'm also going to send you to a resource. Write this down. If you go to Market Traders Journal, it's an old blog of mine, and you search on the keyword footprint, there are some good articles there on trade distributions and how to stack things in your favor that get into that kind of a subject. I strongly, strongly, strongly recommend that you go and do that. Don't do it right now, though. I want your attention right here. I want you in the learning state right now. Okay? Do it later. Market Traders Journal, search on the word footprint. In fact, I'll put that on the page later for you to go check that out. I'm going to give you a page that's going to have a bunch of resources on it for you at the end of the webinar. So there's really only 2 kinds of trading. There's trend trading and counter trend trading. But you can also mix the 2 and make a hybrid. Okay. In this example, we're talking about a type 2 divergent pattern. We're looking to take a trend trade where the market is pulling back from a trend that is occurring on a slightly bigger time frame. So what's that look like? Okay, I'm looking to buy in the pullbacks. Okay, like A, B, C, D, I'm looking to buy in the pullbacks. A, B, C, I'm looking to buy in the pullback. Why? Because the risk is lower. What's trading is about managing that risk, right? And so, so when you do that, that's technically a counter trend system, because if I'm buying here, I'm buying when it's going down. But the bigger trend's going up. And so I have a statistical system that is predicting that the market's going to go up, and then I try to buy it when it's going down. We call that a hybrid. One can also trade only with the trend. In a pure trend trade, it's a breakout. So you'd literally trade the breakout from that break right there. But that can get you into trouble too much. The win percentages are not great. We're going to look at some stats for that in a second. In this case, a trader would be more likely trading at or near new highs or new lows. So we got one where you take the trade you go long in the pullback. You got another one where you go long at a new high or at a new low. You go short at a new low. A pure counter trend approach would be selling new highs and buying new lows. So as it came up here, you try and sell it up in here and hope it goes down. So let's look at a couple of stats for these kinds of things. These three basic types of trading systems or approaches have, in general, certain statistical profiles. So if I told you I had a trading system with a high win percentage, but where the average winner is less than the average loser, I would envision a counter-trend trading system. So you tell me, oh yeah, my system's 72% profitable, and the average win-loss is 0.73. In other words, the average loser is a little bit bigger than the average winner. I would say that that is a relatively high win percent. The average winner is less than the average loser. I'd go, that system is counter-trend oriented. Pretty cool, huh? I just look at somebody's stat, I know what they're doing. Pretty cool. You can use that to your own advantage. If you were to say your system had a fairly low win percentage, but the winners were much larger than the losers, then I would envision a trend system. If it was right in between, I might envision a hybrid of the two basic system types. That's what we're talking about, buying in a pullback. Because most markets trend over longer times and counter-trend over shorter periods, there's a bit of a statistical advantage to trend trading in general by taking advantage of bigger range expansion associated with trends. The trend is your friend. So here's a system, percent profitable 58%, average win, average loss 1.84. Trend system. A little bit hybrid, the trend system. You'll see systems even like 25% winners and with, you know, big average win, average loss. So if you can manage to build a system that takes advantage of both of these things, call that a hybrid, best of both worlds. That's a big topic, but for our purposes, hybrid approach is preferred, especially if it can be aligned with other ideas that we're discussing. So that lines some things in your favor, like Ted Williams' batting system, right? How you come out on top. Amazing principle number 3, markets like to move quickly through areas of low volume and slowly through areas of high volume. In electronics, it's like saying electricity follows the path of least resistance. Electricity goes down Ben Franklin's kite string because it's an easy path, right on down to old Ben's key and knocks him on his hind end, right? For our purposes here, I like to call these open zones. I'll call them open zones. You can call them other things, but it's an open area. In market profile parlance, you might call that it could be called a single print on a 30-minute chart. So you look at the 30-minute chart and see where price did not overlap other 30-minute periods, where it did not overlap other 30-minute periods. Why use a 30-minute chart? Because market profile traders use 30-minute part in that charts, and that's a large group of fairly well-capitalized traders. So either you want to catch them where they're wrong and use their stops to propel your trade, cool concept, that works, or you want to not be on the wrong side of them where they're in control of the market. When the market's trending, they tend to be counter-trend traders. And so when the market's trending, when it breaks out of their areas, that's a little beyond our discussion today. But the same principles we're discussing here can be applied to the Smart Renko that we used earlier, looking at the cycle lengths and stuff like that. And so you can use it on much faster or shorter time frames. Okay. So you trade fast through low volume. Trade fast through low volume. You can also think of this with an analogy of a traffic jam. There's lots of volume on the road, lots of cars, can't go fast. Get out there at 2 o'clock in the morning, there's low volume on there, and have at it, right? Get that new Camaro, 600 horsepower, and go tear it up. So let's look at a couple of these patterns. So this goes straight, 2 bars straight up, and leaves an easy zone there. The market come back down through that. It's not guaranteed, but you're aware of this pattern on your charts. Okay. So market goes another 2 bars solid down, can't cover the next day, comes back through here, gaps up. Would have had to catch that one in the night session. This is a covering point because it filled this single print area, and so you expect to find some sellers there. So I might, on a chart, call that a decision point. If I'm long into that level, I'm going to be cautious. Okay, this is zero volume area right here, or overnight area. And so you open gap up, you fade back down. This is why gaps fade. You get another one here. It hadn't covered yet, but it will. Here's another single print area right here. Sometimes you'll find some support at those areas. But as you enter into the area and you're cycling with the kinds of cycling concepts we're talking about, sometimes these zones will be big. And you'll clear them. So those are some pretty cool concepts. There's a lot of ways you can use this technique that can even get beyond what I'm discussing here. So these areas pointed out on the chart, not all areas are marked down here, I'm just showing you some things. There's another concept called anomalies. Anomalies are where you get little notches in a profile. Very powerful technique. And I don't have any particular slides for that here today because it's a little bit too much, but maybe on another webinar. In review, areas of low or absent volume are traversed more easily and often more quickly, and areas of congestion with more difficulty or more slowly. You combine that with some of the cycling concepts that we've talked about, and it becomes a very powerful thing if you know what kinds of areas you're traversing through, and then also with the range expansion concepts. So, trends into open zones can be some of the most rewarding trading you can do. Learning to know where these areas are in your chart and positioning yourself with the trend through these areas can be well worth waiting for. We already talked a little bit about different bar types. Bar types are a way of organizing data. It's like having a spreadsheet and sorting your data so that you get it into a form that makes your charts very, very clear. Order flow based charts are very powerful in that way, on faster time frames in particular. So line it in your favor, shouldn't you? It's like Ted Williams' batting system again. You line some of these things in your favor. Amazing principle number 4. These are a map of the market. Well, what do? I take the entire week, 30-minute bars, 30 minutes right there. I take the entire week and I map out the expected range for that period. Expected range for the period. Okay, so Monday mornings, right there, I expect 59 ticks in crude oil, $600 on one lot. And then what I do it for every period of the week. There's 55 periods in the week. You can do this in any market. Very powerful. And then I sort it. What's the worst period of the week? J period on Monday, 55. It's the worst. What's the best? E period on Wednesday. It's the number 1 period. Best, 108 ticks. $1,000 plus in crude oil, right? That's a good place to trade, especially if you're cycling through an open area and these other concepts that we're talking about. If it ain't green, don't trade it. Powerful. I just don't trade in red areas. Just don't. It's very, very powerful. You'll line this up with some of these other concepts. So that's like another tool in the toolkit. We're kind of making a system here. You take each one of these concepts and then you just wait for the times when it all lines up. And where I got 4 of them now. I'm going to have 5. Actually, I'm going to start tying some of this together. I'm going to run out of time. The best trading systems are made of actionable collections of ideas. Imagine you have all the above resources with a good collection of statistics that you know. In this case, the chart is unfolding during the day. You take these different concepts and you line them up. You say, okay, is this one lining up and that one's lining up? And literally, when you have all this laid out, you have independent system components that collectively make a trading system that adapts to what the market's doing in any moment. Then you look at the patterns and you sum them up. And each one of them is independent and has a statistical edge associated with it. The very best trading systems in the world are made on that principle, period, bar none. On this principle, on this slide right here. You take all those things and you put them together. You get 4 or 5 of these things lined up. You got, like, you know, some of these trades 98%. The very best trading systems ever devised are based on this principle. More components you can bring together, the better the system. I know guys that have developed this upwards of 15 components. But even if you can get 4 or 5 of them lined up, it's powerful, powerful stuff. Simply align multiple of these things in your favor and the market will tend to move with consistency and with probabilities. Like I said, we lay some of these things out. Be patient and take the ones that align. They can also align with you as you understand the concept, right? Pretty cool. The thing that I like about using statistics in trading and in teaching trading is that it makes it easy for your belief system to come into alignment with the market acts consistent with the stat over time. So you keep seeing it hit the stat, seeing it hit the stat, seeing it hit the stat. At some point you get tired of not being in a trade and you go, okay, I can trade this, I can do this. So it really helps as a training aid. Amazing principle number 5, use search for pieces and assemble the puzzle, even anticipating how the puzzle is making itself up as the market unfolds. You're taking these components. This enables you to experience what most traders never imagine, which is what I'm describing here. Watching your hypothesis as market action unfolds before your eyes, knowing it's in alignment with high probability statistics. Cool, huh? As you do this, you find another benefit. It tends to lead to your seeing and understanding market movement in new and unique ways. In other words, it becomes a feedback mechanism for success. That's rewarding and it's fun. Takes time. But remember Ted Williams' batting system, kind of like that, right? Okay, so amazing principle number 6, make it your own. I've been training traders for a lot of years. And if I've learned one thing, following another trader beyond learning the techniques will not lead to your success. You got to do it on your own. You got to make it your own. So that's that internal alignment with your own belief system. This can be done by having a known, proven, experienced trader assist you in appropriate and supportive learning environment. You find that person that vibes with you and their methodology vibes with you so that you can bring it into alignment and learn. It becomes an awesome feedback mechanism. So you strive to rely on your own internal model of the world and get it aligned with the truth of trading as soon as you can. Getting yourself to a level of self-reliance will pay you back many times over for the effort, and you will feel better about it too. Look to the inside for your guidance. And that means taking full responsibility for your result, as we talked about earlier. So, Ted Williams' batting system. If Ted strikes out, does he start blaming his mom? I don't think so. Amazing principle number 7, operate like a business. We've been talking about using statistics. Line things in your favor. A business has some basic procedures for operating, and a trading business is much the same. So, businesses are based on principles established in reality and relationships that have measurable value like statistics. Tell me that McDonald's doesn't use statistics to determine what products to sell. Trading is the greatest business in the world, but it's also pure, underline that about 5 times, capitalism. And in the intraday time frames, it's more or less instantaneous pure capitalism. Your brain is not naturally wired to deal with instantaneously pure capitalism, so you got to get the alignment with it. But it's a gift, because the feedback mechanism can lead to profound learning and personal advancement. I mean, way beyond trading. Way beyond trading. So literally trading turns into something that just makes your life awesome. So we've got a couple minutes. We'd probably look at some charts here. Let me pull up a chart. I'm just going to go, guys, I'm going to jam through this pretty quick because I can't go over time, but here's a chart using the ultimate tick bar. This is yesterday's. I don't have live data right now because my trading room is actually still operating. And so we're going to use these colors of the bars to take some of our wave counts. And we're going to look at these type 2 divergences. I'm just going to point these out. Here's one right here. Is it lower? Yeah, it's lower. Okay, you get green on green, you go. Okay, it goes lower. Same principle. Expanding cycle. The cycle's expanding. It's higher. This is higher. This is lower. This is higher again. This is lower. Oh, green on green. Bam. This is a smart patterns trading system from IndicatorSmart. Okay, comes back up again, comes back down, pulls back. This is lower. This is higher. Hit it again. Stays green. Hold it. Okay. System doesn't put those arrows on there. I just marked those on there before we came into this webinar to show you. Okay. So I'd like to show you, okay, this is basically like a non-cycling, but actually you get A, B, C, D down here. Okay. You get the type 2 right here. That's basically level, right? That's a buy right there, green on green. So you get trapped. That's fine. Tells you the market's probably turning. Okay. Now you get this one. This is a non-cycling. This is the second one I was showing you about, the one that was on the left-hand side of that first chart. You get red on red, go. Okay, comes back down again, comes back up. This is lower. This is higher. Red on red. Bam. Oh, there you go. The arrow's on the wrong place. Move the arrow. Right there. There. It's lower here, a little higher here. Bam. Hit it again. This goes like higher here. It's possible you could have gotten trapped on this one. You get stopped or hold it through, and you catch that one right there. I missed that one right there because it's a little higher. Yeah, it's a little higher there. So yeah, you could have got trapped on that one. Okay. Sometimes you got to re-enter. It does it again here. It's higher here, lower here. I think it works like clockwork on these ultimate tick bars. So this one goes way up. It actually broke this high. Sometimes you'll take these. You get the red on red, you take that. Now you might have been able to scratch that one or get stopped out. Then you get this one. This is a beautiful non-cycling type 2. We talked about it was on the left-hand side. You're higher. You get green on green, go. Powerful system. Awesome. Okay. A, B, C, D going down. Come back up. This is higher. This is lower. Red on red, go. Can't make this stuff up. You're getting into the quiet part of the day here. I wouldn't even be trading in these areas on the map, but I'll go through them anyways. This breaks the cycle, and so you're looking for one here, but you don't get it. This makes lower here, and so you don't get any trade set up over in here. A, B, C, D, and you're looking there. You get on that one, and you get trapped. You get nailed there. K period's one of the best periods of the day, often, not always. You get a type 2 right here. Actually, this one's a special case, so I'm not going to count that one. This one's a special case. That's not a simple one. This is a more advanced one. And actually, it goes to over here. It's lower over here through this whole region. And so you can take that or not. But if not, you got this one right here. And it's higher. And you get green on green, and you go. That's into the end of the day, and so that's the end of it. Sometimes these would be good after hours. So anyways, that's just a quick glimpse of the Smart Patterns trading system using the ultimate tick bars. It's really two systems in one, because we also do the same thing with the Smart Renko bars that we talked about earlier. So two different bar types that organize the data in different ways. If you're fairly new, the Smart Renkos are good because they teach market structure, and we teach that in the oil trading room. So that's kind of cool. That's kind of cool. Amazing little system. And that's the system that Jim used to rack up about $500,000 the last he told me. And so, is that normal? No. No, but that's somebody who just really went at it aggressively with everything in their person in alignment. It's a wonderful example, and it's very inspiring. So what I just showed you is the oil trading room system on the Smart, on the ultimate tick bar, but this is also in the room we use a Smart Renko. The same kinds of patterns that we use, the type 2 patterns. I don't have them marked out here. This is just what the room looks like, what the trading room looks like at the oil trading room. And so the Smart Patterns is like a toolkit. What I've shown you on the chart that we just looked at is the most basic pattern that I teach and trade. But there's tons of other ways that you can trade these things, and you can really take this into a deep level. So you can make it really kind of in-depth, or you can make it really simple. I like it simple. But the depth of learning can just go on and on. And in the oil trading room, we have a lot of really experienced, high-powered traders in there. It's a serious room, but it's a fun room. We joke around a lot, and we have a lot of fun. But these traders are using this system. You don't have to have the system to be in the room. So these trading systems are based on methods that are grounded in solid statistical methods. I didn't tell you I have a degree in experimental psychology, and so I have a background, educational background in statistics. I forgot to tell you that. That's why I use stats for everything. Actually, a lot of the things that have happened with this system and in our trading room is members have brought forth different kinds of ideas, and we ran stats on them. And so that's pretty cool. Different people introduce ideas, we run stats on them, we find they're powerful, we use them. So the room is a wonderful place for sharing. So it's like having a trading system that literally walks through the day with established probabilities as it goes. It's well worth the effort, and it's fun. Being a world-class trader requires alignment between what is real and factual and your belief system. If those two are out of alignment, you'll lose even if you have a holy grail. If your belief system's off, you literally will not be able to see what's right in front of your face. So in order to develop the alignment, you have to know your method's based in fact. This is statistics. Helps you to do that, as I discussed earlier. And then you practice and bring your beliefs in alignment with the method. The process is, as I said, personally transforming. And this is what you do in the oil trading room. And that's what Smart Patterns is all about. So you can look at the reviews page at the oil trading room and ask yourself, do the traders writing these things have alignment between what they believe and the results? You should do the same now. You can see some of those reviews, oiltradingroom.com reviews. You're at bat, so make the most of it, right? So we've covered a range of topics involving Smart Patterns in the oil trading room. I also have some auto trade systems through Robbins Trading Company. There will be some links for that on the page that I'm about to share with you some resources. We've been covering some key factors in what our training and resources can do for you. And so you know why this can work for you. And you know we actually do this, and there's a whole lot more to it if you want it to be. And so you know how it will work for you coming from a World Cup champion trader, that's me, by checking out my reviews page. You can also check out that Robbins interview. It's kind of cool. Talks about my development as a trader and everything else. But in the room, you have me looking over your shoulder and assisting you. You have 2 hours of me every day. I bill at a rate of $500 an hour. And you get me for 2 hours a day for $10. That's kind of cool. You get $1,000 of consulting every day for 10 bucks. So if I were consulting with you on an individual basis, and that's because we have a lot of members, and so it subsidizes everything down into a rate for me, and I really enjoy doing it. As I said, my mission is to help people. I get just tremendous joy from seeing a guy come in and just really take off. So that's what systems are all about, like Ted Williams' padding system, as we discussed. So this is just a screenshot from the reviews page at Oil Trading Room. Okay, so Oil Trading Room, learn it all. You got permission. You deserve the best. And here's a special offer for you today. You get the Smart Patterns Ultimate System, IndicatorSmart.com/SPU. You don't need any coupons today. No pressure. You don't got to do it now. I only want you to get this if you're ready for it. Okay? If you just want to trade crude oil, a lot of guys just start with this and then they upgrade to that later. No coupon needed. I've got the price. I got $3,631 knocked off the system price. Now, you don't absolutely have to have that system. You can just join the Oil Trading Room and get more of what we're doing there and get your feet wet there, and then as it makes sense for you, you can get the system components. You should probably get at least a Smart Renko bar to get started. But the room members will help you, and the resources in your members area will help you with that. Use the coupon code BLACKGOLD199, and that knocks the subscription price down today for you. You can get all the resources that are on this page at IndicatorSmart.com/mega. Let me show you what that page looks like. Grab the wrong one. Okay, this is the page, IndicatorSmart.com/mega. Let me show you what you got on there. You have a link to the Oil Trading Room. Okay, you have some links to these systems. If you want to learn more about me, there's different videos and interviews here with me. All right, some other resources. If you are a longer-term trader, you don't trade intraday, then we have an auto trading program with our bond program through Robbins Trading Company. You can check that out at worldcupadvisor.com. Okay. You might want to get this 4 Amazing Day Trading Setup ebook. Just opt in there. You get the ebook, and it tells you some really cool day trading patterns. And you can also join us at the Oil Trading Room over here, and there will be a bar up at the top. You can opt in there if you want to get information about updates and stuff there. So, okay. So, oiltradingroom.com, IndicatorSmart.com/mega. Mega. Right there. Okay. IndicatorSmart.com/mega. All right. So we've gone on a journey today, and perhaps you've found something valuable. You've discovered something new. So what'd you learn? What'd you discover? And what questions do you have? If you have some questions, I'm glad to take them for you. Jane, it's best to use this on futures. What I really want you to experience is the volatility and the risk management. You could use it on stocks, but I don't know why you really wouldn't want to once you experienced what we're doing, like in the room. There are some benefits. I'm not giving accounting advice, of course, but there are benefits to trading futures for stocks as well. I mean, over stocks. Better tax treatment. You can use it on the ES, Clyde. I mean, you could try to use it on the SPY, but I don't know why you'd want to. You want to use it on the ES E-mini futures. System works great on that. A lot of guys in the room were trading that today. You can use it on any currencies for futures. Don't use FX. There's no volume data there. And I would strongly encourage you to use futures currencies. OilTradingRoom.com. Renkos can move very fast. Actually the Renkos are fairly slow. They're fairly slow. The UTBs are fast and fast money. If you like fast money, go for it. Oh, I'm in Pacific time, James. Sorry about that. I should have told you. Cycle is a simple concept. If you go a higher high and higher low, or just higher lows, you're in an upcycle. If you have lower highs or lower lows and lower highs, you're in a down cycle. Now I know that was a mouthful, so let me say it again. If you go A, B, C, D up, you're in an upcycle. If you go A, B, C, D down, you're in a down cycle. What you get with that pattern is lower lows and lower highs for down, and higher highs and higher lows for up. Okay. I can't look at the live market today, Norman, because this webinar is actually going on while the room is live, and I have to move the room to the other computers because I can't run two webinars on the. I can't run the room and two webinars at the same time, so I used a historical chart today. Usually I do it with a live chart. Okay, any other questions, guys? I strongly recommend that you would use futures, Roger. I do not know why you would want to use stocks as a trading instrument for this system, because your returns are going to be very substantial. But you can use these on stocks, but you'll have to adapt to it a little bit from the standard things like in the manual. But these methods definitely work. ZB, I don't recommend it because the tick structure is $31.25 a tick, and so that's why we do bonds as an auto trading program through Robbins Trading. If you go IndicatorSmart.com/mega, there's a link there to Chad. You can also go to WorldCupAdvisor.com and see our performance there. Well-mannered at the edges. Well, everything that we've done today is basically talking about trend trading. Now, if you want to see some techniques for counter trend trading, you'll want to see a webinar that I did last week. I think there's a link to that on that mega page. So check that out. Not really, Mandy. The signals that I just showed you, like on the UT chart, the UTB chart, are just color on color kinds of signals. And so you learn that basic pattern and you can trade off of that. Guys in the room will tell you that all you need to know is the type 2 pattern. And I agree with them. All you need to know is a type 2 pattern and do it into open areas. You line those things up, everything's good. Actually, even if you don't line that up, look at the what was my losing percentage on what I showed you yesterday. I know it looks crazy, but that's what's the chart. Those were the trades. You might not take them all. You might choose to trade. I don't even trade myself in red areas on the, remember this. Is this it here? Yeah, I nailed it. I trade the green areas because that's where the alignment's good. Then I'm done. I trade in the morning. Trade here, trade here, trade here, trade here, and trade here. The afternoons can be good. K period, last period of the day. So powerful stuff. Ninja Trader. And so I think the guys are, I'm hitting up against my time limit here, but there's plenty of information on the sites there, and you can reach out to me. Let me put my last slide up, contact information. Thanks for coming in today, guys. Thanks very much for taking your time to learn a little bit about what we do. You can always email me, support@oiltradingroom.com. This one is IndicatorSmart.com/mega. Okay. Now, I've got my phone number on there. I'm pretty much an open book, but don't call. Gotta have an appointment. Gotta have an appointment. Usually I'm going to help you by email. I help a lot of people in a day, and so please be courteous of my personal resources on that. And so also within the trading room, like I said, you got 2 hours a day of me every day for $10. Can't beat that. So, all right, guys, thanks again, and thanks very, very much to Win Investing for having me in today to speak. It was a pleasure, and I hope you all got a lot out of today's presentation. It was fun.